In the business report, the foreign exchange market is being affected by a reported decline of about $220 million in earnings from the business process outsourcing and tourism sectors. As a result, the Bank of Jamaica is reporting another significant excess demand for foreign exchange, with more than $139 million in unmet demand over the last 2 days. The central bank intervened in the foreign exchange market, offering $40 million against demand of about $110 million, resulting in a $70 million unmet demand. This after the BOJ pumped $40 million on Thursday, but received a demand for approximately $109 million, leaving $69 million unsatisfied. The latest figures come as Jamaica continues to face a substantial foreign exchange gap following a trade deficit of approximately $2 billion during the first 4 months of this year. Microfinance company Dollar has turned its focus on helping the transportation sector recover in Western Jamaica as part of its growth strategy to offer loans where businesses are rebuilding following recent hurricane disruptions. The company says it is directing capital to businesses that need it most, while at the same time targeting opportunities that can deliver strong returns. The company is putting greater emphasis on the quality and security of those loans. Denise Williams has more news on the financial market.
For the trading period of August 14, 2026, the most actively traded securities were Trans Jamaica Highway Limited with 2,149,848 units, Dollar Financial Services Limited with 3,883,203 units, Atlantic Hardware and Plumbing Limited shares with 1,235,609 units. Investor activity remained concentrated in distribution and transportation plays, signaling continued interest in dividend-producing and strategic assets. Turning to the foreign exchange market based on Bank of Jamaica data for August 14, 2026. Forex traders recorded significant activity with strong demand across major currencies. For the US dollar, trading margins reflected steady liquidity, with the US selling at $158.30 and buying at $157.11. For the Canadian dollar, moderate gains supported by 49-cent transaction spreads. The Canadian dollar sold for $114.52 and was bought for $114.03. For the British pound, continued volatility offered short-term trading opportunities of $1.65 in profits for the banks. The British pound sold for $214.84 and was bought for $213.19. These movements underscore the importance of cash flow timing and currency awareness for businesses managing import costs, debt servicing, or overseas exposure. For our credit report tip of the day, when food, housing, utilities, and transportation rise faster than wages, the pressure eventually shows up in the credit file, but usually indirectly. So inflation, which is rising prices, tends to move you if you're not careful in this path. First, your balance on your credit cards or your loans go up, which mean higher utilization of credit, which can cause difficulty making payments, which leads to late payments and then collection calls and eventually lower credit worthiness. The important distinction is that inflation itself doesn't lower your credit score. The financial behaviors caused by the pressure of inflation can. The ultimate goal isn't merely a higher credit score, because credit worthiness gives you access to capital. Then income gives you the ability to service capital, and then assets give you financial independence from your labor. That's the progression. So when food prices rise and salaries remain stagnant, the answer isn't simply stop using credit, it's protect your credit while simultaneously working to increase income, preserve cash, and acquire assets. And that's today's business report. I'm Denise Williams. Until next time, stay informed, stay intentional, and keep building forward. See you soon.